Yeah, Monday. What's up, everybody? Monday, May the 4th. Hope everybody is having an amazing day. Had a great weekend as we are kicking off Star Wars Day the right way. Yes, it's Star Wars Day. In case you're wondering, that's because May the 4th be with you. Oh, I love it. I love it. All right, let's go ahead and do what we do each and every day, identifying potential breakouts and reversal trades from an educational perspective, from our some of our trades that looked like they came close to meeting entry last night from our live trade room. We're going to review some of those levels as we go. If you're new to the channel, click the subscribe button, hit the notification bell so you get the alerts and the updates as they happen. Let's go ahead and dive right in. So the ES last night is our first market that we're going to take a look at, and we did gap down. And I will tell you, I was a bit more bearish on a gap and go scenario, and we got a little bit below the first candle's low, which is typically a pretty good signal for the gap and go. It just really didn't go. It gapped and didn't go anywhere. And now we popped just above there at about 10 o'clock last night, just above that gap and go area. I still have more of a bearish sentiment, just based on the fact that we have the ability for price to kind of continue to come down. Now, when I look at the 4-hour chart, remember my 4-hour chart, I definitely have a lower swing low, right? So when I look at my swing highs and swing lows, as I take a look and I think about, this is my last swing high, swing low, swing high, right? When I look at my last two consecutive swing highs or swing lows, I got lower than my prior swing low. So no question that we're going to have a lower swing low. I don't officially have a lower swing high as of yet. Now, if the rally from last night counts as a swing high and we come down from here, then I will officially have higher swing highs, or lower swing highs and lower swing lows, which would put us into a confirmed downtrend. So, it's a bit premature to be overly bearish, and I think that we were talking last night about no man's land is between 2,700 and 2,625. As long as we stay above this 2,700, I think that the bulls are still kind of in control. The bulls are still in control until I get a lower swing high, and then we'll see if the bears kind of come in and take over. So if you are a bit more bullish, you're getting a little rally. We're actually getting a little rally off of this demand area, which was our European market open level from a couple of days ago, but I'll show you that one in the NASDAQ. And we have gotten a little bit of a rally off of there. Now, our gap fill area for a potential reversal is up here. We came close to that level and were unable to get filled. So now what I need to do is I need to change that to a confirmation entry going forward. Next, looking at the NASDAQ. So the NASDAQ gapped down into our demand area, and we have gotten a little rally off of that zone. That's if you were going to get long on the gap down into a demand area, the NASDAQ one was the way to go. That's the level that we had marked off from last week. Got a nice little run off of that level. Now, we did trade over halfway into the zone. So since we traded over halfway into the zone, I need to take that level and remove it. And it's not going to be a level that we're going to lean on any further. Now, looking above where we are, we did come all the way up to the gap fill area, and we're starting a bit of a move off of that gap fill level. I think that if we're gonna get long, what you would need to see is price get above this area in here for us a chance to get long. And I think if you're going to get short, I don't think the NASDAQ is your market to do it in. I think you're better off using the S&P as a level to get short. So you can keep an eye on for basing in front of this level for a potential breakout to the upside. But I think if you're going to get short, the S&P or the Russell make much better levels than the others. All right. Next, crude oil. So in crude, we were analyzing the September contract, but looking at the June contract, we hit our supply level, came down, and now we're kind of basing above this 18.16. I'm gonna go to the September contract, which is the one that we've been analyzing. Now, if you were trading this one, then you got a pretty good opportunity with this short from Friday, as it's hit that level twice. And I think the chances are that we're going to continue for price to come down from that level. We gapped down into the overnight, got a little bit of a run. We did rally up, but then have been unable to hold any of those gains. And so when I look at where we may go today, I still think you've got a breakdown possibility in here. Now, we are coming close to this big move up right here. Well, let's take a look at that move up. If I look further to the left of that move up is a reaction of all this area over here to the left. And so I think that the better chances are for price to continue to break down, and I think that we could break down and easily make it down to this level in here. All right, looking over at gold. Gold rallied up last night. We were looking at this area in here to say, okay, if we drop into here and get some basing, there could be a breakdown. But that demand level actually held pretty well, and we got a little bit of a move off of that zone. So our gold level is moving, rallying pretty nicely off of that zone. We've come up to this area here, had no basing in front of there, so nothing to do with that area. And now we're just about back to the origin of this big move down and getting a little bit of weakness heading into there. So I think that in the overnights where we got this little rally up might be worth looking at for a potential reversal. That's right around the Frankfurt opening. Not quite London, but the Frankfurt opening, and I think that that's where you could get a little bit of a drop down into here and get a piece of a reversal for an opportunity today. Bonds and currencies, and I will tell you, bond markets, I've just not been analyzing, and the reason for that is because our 4-hour chart is very much sideways, and this is dangerous and tough sledding when it comes to trading, and so I'm just not gonna even look into any of these for an opportunity. I think I'm just gonna let this one be. There's no really great setups in the bond markets. When I look at the Aussie, we've rallied close to our 15-minute area. Now, I looked above the gap fill level to this little trap zone up here. Turns out that the gap fill was the better level, but I still think the trap zone was a bit safer, only because it's a very, very clean reversal point. So I'm going to leave that one in place. I think it's still valid. We are coming down off of that zone, and this is a little bit of a double bottoming pattern in here. So let's see if we get some basing in there for a breakdown. In the euro, we did get a breakdown in the euro. 1, 2, 3, 4, 5, 6 candles later. We haven't really gone very far, so your stop should be at break even at this point, possibly even out of that position at a break even or a small profit. And so if you didn't get there, I think you still have another breakdown trade down below here if you want to give that one a shot. As we've retested this supply area here a little bit, I am going to wrap my lines around this gap fill level as an opportunity as well. Next would be our Canadian dollar. So the Canadian dollar really taken a big fall in the last couple of days off this 4-hour chart. When I look at the daily levels, it's not as strong. It's very much in a pretty wide daily range, and so I wouldn't be surprised to see us bounce off of this on the smaller time frame. We're getting a little bit of buying pressure in here, and so the little bit of buying pressure that we're getting in here on a 15-minute chart, you're seeing slightly higher highs, but it's giving us a bit of weakness into here. I'm going to shift this to a confirmation. Since we are basing in front of that level, it takes it and makes it a little bit weaker, not as strong on the probability scale, and really not a great time of day that it was formed. So actually, you know what? I'm going to go one step further and just remove it and look up here to this wick over wick area as a better reversal trade. Yeah, time of day combined with the fact that we're basing in front of it make it a little bit less on the probability scale. Great British Pound and Japanese Yen, as we are kind of wrapping things up for today. In the Great British Pound, we had a breakdown opportunity, and we broke below that level. We did get a bit of a rally back up, and we're kind of continuing to make that move down. on the British pound. So as that one kind of moves down, if you didn't catch the entrance on there and you still want to give this a go, if I move down to the smaller time period, I may see that there's a small reversal opportunity right here that we could retest here in a little bit as an intraday trade. And then on the Japanese yen, we are in between our areas of demand and supply. This was our demand level from Thursday that hit and went and moved really, really well for those of you that caught that one. But now we're in between those areas, and I think there's really not a whole lot to do up until we can get through one of those zones. So with that being said, I hope everybody has an amazing day. And if you have any questions, as always, please feel free to send us an email, support@tradersarmy.com. And I will talk to you soon. See ya.